Okay. All right. Hello, everybody. My name is Brian Van Hook with Florida SBDC at FIU. I know everybody's going to be streaming into the webinar, so we just want to welcome you to this webinar on small business grants and financing. I'll give you a minute, and then I will also introduce some of our esteemed panelists that we're going to hear from. So you have a treat today. You don't just get to hear from me, but just get to hear from some great groups in the community. Okay, so we'll go ahead and get started. Um, just a quick note about who I am. As I mentioned, I'm Regional Director of the Florida Small Business Development Center at FIU. I've been with the center since we opened in 2014. Prior to that, I worked in Washington, D.C. for 10 years, both at the Department of Commerce and also the U.S. Senate. Important for you is I was actually the grants guy in my office. So I worked on grants. I worked with CDFIs, with mission-based lenders, with SBA, loans and things like that. So I do have a good, background in terms of a lot of these programs, but you have a special treat because you're not just hearing from me today, but you're also going to hear from some great community organizations. So I was going to introduce them real quick, and then they are going to provide you more information on their programs. But Barrington, I'll go ahead and introduce you first.
Great. Yes, good morning, everyone. My name is Barrington Eady. I'm from the Community Fund of North Miami-Dade. We're based out of Opelika, Miami, and we are a CDFI. And looking forward to providing my presentation to get to know everybody out here and see how we potentially can help in the community. So thank you.
That's great. And then Fabian, I'll go to you next. I think you're muted.
Yes, good morning to all and a happy Thursday. We are here as well as a CDFI. We are a nationwide community development financial institution. We have been assisting entrepreneurs for the last 34 years. So we are a long-time organization here in the United States. And our objective is to help you to access capital and as well with a piece of financial education. I love to hear from your question. Thank you, Brian, for the invitation.
And then we do have a third panelist logging in from Miami Bayside Foundation. So I know she'll log in as we kind of get in the presentation, but I also have her slides for when we get to it. And then just a quick note on Florida SBDC at FIU. We are an SBA resource partner. We provide one-on-one consulting, training, and information. Our center is focused on Miami-Dade County and Monroe County, but we have a number of centers that are all around the state. So if you're not in Miami-Dade or Monroe, just reach out to us and we can get you connected with another SBDC. We're very proud that out of 1,000 SBDCs around the country, we were the 2023 National Small Business Development Center of the Year. So we were Florida and also the rest of the country. So we're proud of our team for that recognition. And then we talked about, we focus on one-on-one business consulting. We focus on training and workshops like we're offering today. And we also, under the center, have the Apex Accelerator Program, which is funded under the Department of Defense. There's about 96 Apex Accelerators around the country. And we have one here in Miami. And so they are focused on government contracting and also government innovation programs. But if you register with SBDC, we can get you connected with Apex and vice versa. So it kind of operates as one center. This is our really great team from Miami-Dade County, 17 consultants. This is our really great team in the Florida Keys, from Key West all the way up to Key Largo. And then in terms of the presentation, we're going to talk about real quick just the different stages of business, how financing comes in to start and grow your ventures. We're going to talk about this continuum or this kind of yellow brick road of small business capital and different points, but we do have this really special panel on mission-based lenders. And then lastly, we do have specific organizations that you can reach out to. We put that in the appendix. So if you're logged into the webinar right now, we are going to provide you with that presentation after so that you can look at those organizations in your own time. So I'm not going to spend time going through those particular slides because we can send it to you after. And I would encourage you, if you have any questions, and please put them in the chat, and then I will get to those. And my colleagues from FIU will monitor the chat and let me know if there's any questions. And definitely put in the chat, who are you, what's your business, because we want to get to know you. So when you're talking about financing, you do need to think about what is the why for your business. That's going to determine what type of financing you're looking for. So if you're entrepreneurial, if you're really focused on buying and selling the business, um, or you're doing like a series of businesses, growth is going to preempt profits for your particular business. In that case, you might want to seek alternative financing, which is more like the equity venture capital side. If you're looking to build more of like a lifestyle business, that's focused on, building a legacy for you or your family. If you're looking to get reliable profits, kind of have it be a stable, traditional business. For that, you're going to go more traditional route, which is going to be SBA, mission-based lenders, commercial loans, things like that. So we always do include that in this presentation just to talk about, depending on what your goal is for the business, that's going to drive your business strategy and also what type of financing you seek. Also, when you're seeking financing, you do need to be mindful of the different stages of your business. So whether you're at the pre-venture phase, which is you have an idea, you're not yet in business, if you're a startup, which is less than 3 years, or if you're an established business that's been around for more than 3 years, different stages of your business also will impact the different types of financing that you're going to be looking for. So just factor that in when you're looking for different types of financing, and I will address that in the different areas of funding. So I know we talked about small business financing, but I know everybody wants to know about grants. And I'm here to tell you, as having worked in Washington, D.C., worked on federal government programs, there's no more free money or grants from the federal government. So anybody that's like telling you that there is a grant from the federal government, anybody like with question marks on their jacket or they're selling you a book or whatever, be very, very cautious because they don't really have that available anymore from the federal government. Most of the grants that they have available go to like counties, states, universities, colleges, those type of things. So they're not really going directly to small businesses. Most of the grants that are available are from community foundations, local governments, and nonprofits. And we will talk with you about those particular groups. In terms of grants, they could be available on an annual basis under the program or like a one-off kind of one-time grant. But while most of these are grants, you're going to have to meet certain criteria or complete certain benchmarks to receive full funding. I also do flag for folks, like there are cohort-based programs. Fabiana and I were talking about a program that we work with called Santander Bank's Cultivate Small Business, where you do go through like a training program and you're eligible to get grants at the completion of the program. So don't necessarily discount those programs because that is a way for you to get really great training, but also to receive a grant when you complete the program. Um, we do talk about in this presentation about debt financing versus equity. Debt is where you're borrowing money, but you have to repay it over time, usually with interest. Financing is non-dilutive, which is the good example, when you're basically an investor in a company or you're an owner of a company, the more people come in, it kind of dilutes the shares or the ownership that you have. So like, for example, when you're talking about equity financing, you raise money in exchange for a share of ownership in the business, but equity is dilutive financing. So the more people that are buying in, that those shares and that percentage of ownership needs to come from somebody. So you could have like an 80%, 100%, and then it could kind of be like whittled down a little bit. So you do want to factor that in terms of debt versus equity. In terms of loans, there are a couple of different types of loans. There's real estate loans, there's lines of credit, kind of working capital. There's leasehold improvements, where you're fixing up a building or you're basically, buying equipment. And then there's term loans as well. So those are kind of the standard four types of financing. And then obviously financing is short-term versus long-term. Short-term is like an overdraft, letter of credit, short-term loan, generally less than within 1 year, but it does have higher interest rates. And it's not really going to address like your long-term capital needs for your business. On the other hand, most of the financing you're going to seek is going to be long-term loans or leasing. That's more than a year. For example, equipment, like they joke about cars, like equipment depreciates as soon as you buy it. You know, you could take that on a long-term lease with the eventuality that you could buy out the lease in terms of the equipment. So actually would be probably lower after you've leased it for a while. But long-term financing does provide stability, but the interest paid over time is a little higher because it's a longer period that interest is accruing. And then lastly, in terms of equity financing, as we talked about, that's raising money in exchange for shares of ownership in the business. This does allow you to attain funding without incurring debt or having to repay specific amounts. The most common type is equity financing that comes from family or friends or business acquaintances. But we always do stress from our team that less than 1% of companies that are seeking like traditional venture capital actually get funded. So I know Shark Tank is really glamorous in terms of businesses, but really most of the financing that comes for businesses does come from family, friends, and business acquaintances. And we will talk about that when we get to the equity side. So what we did in terms of this presentation was structure it kind of like as a road or as kind of a continuum, because it is tough to keep track of where all this financing is available. So you'll see basically where bootstrapping is kind of where you start out first, where you're paying out of your pocket, maybe out of your retirement to start the business. Then maybe you're eligible for some small business grants. Then you would approach mission-based lenders like we're going to talk to today, SBA microloans and loans. Then maybe you do a friends and family round for equity. Then you're working up to commercial loans. Then you have crowdfunding, peer-to-peer. I'm not going to get too much into those. We do have some links at the back of the presentation that'll tell you more about particular where you can look up for groups on that. And then angel investors and then venture capital. So for those, you can hop on or hop off, but that does kind of follow the sequence of most businesses in terms of accessing financing for their business. And it is something where you're kind of building up or you're scaling up to get those particular types of financing. And we did include just a bulleted list of that, so it's not kind of in a graphic for that. And then, like we said, basically financing for your small business is like a road or a pathway. You can access different points on that continuum depending on the stage of your business, what industry you're in. There are some industries that are not eligible. Cannabis is one, like marijuana, CBD, that is kind of always difficult to get traditional financing for. Most of those tend to get like venture capital or equity. Also depends on your business structure, the type of capital you need, and then other factors that you're going to consider, like your credit history, what's the revenue or profits or balance of your small business ledgers. So those are different things that you would factor in to the different types of financing. And then now I'm going to do like a deeper dive on some of those different points. So first up is our really great panel of CDFI's mission-based lenders. Mission-based lenders have a primary mission to promote economic development in underserved areas or particular geographic area. They provide affordable financing, training, and support for small businesses in particular areas. It often can be a mix of like federal and state funding or private funding. But they focus on particular geographic area, underserved populations, and they provide loan products and technical assistance. So I did include the link up there that you can look for CDFIs. Also for Miami-Dade County, I did include at the back of the presentation an appendix that lists particular organizations. And so I would kind of encourage you to take a look at that. But as it happens, we have two really great lenders that are available. So Fabiana, if you want to pop on, we can kind of go through your information on your program.
Yeah, sure. Thank you very much, Brian. And it's very important to make a difference between the community financial development institutions like Ascendus, Miami Bayside, the North, because remember and keep in mind that we are an organization that we have a mission. We want to lend money or to provide the technical assistance on a one-on-one basis because we want the business to be successful. Let's continue to the next page, please.
Okay.
Sometimes we need to evaluate why we are helping these individuals that they are considered maybe in LMI areas, low and moderate income areas, where they are always, there is a trend that they left behind from the traditional lending system. Why? Because they don't have the credit, they don't have probably the time in operations. This is the reason why the traditional lending system, that they have amazing programs, each bank, each lender that you work with, where you make the deposit from proceeds from the sales from your business. They have amazing programs, but they have regulations. Remember that the financial institution, they have a lot of regulation, like for example, the Patriot Act and many other situations that they are probably having willing to lend to you, because remember, banks wants to make money, absolutely, but they have some limitation, and this is when they refer to us, to the CDFI. And why Ascendus? Because as I mentioned before, we are a nationwide organization, providing the access to capital for the last 34 years. 58% of the clients that we serve, they are into the low and moderate income areas. Our objective as well is to provide and to retain and help with the job creation. Next slide, please. What is the criteria? Because I mentioned that banks want obviously to do business with you because you are your client, you are the best probably member making deposit and asking for credit cards and asking for line of credit and many other services. But the main reason sometimes that they cannot help is because of the industry, because of the credit, because of the cash flow. And here we are, the CDFI, trying to cover that gap. So CDFIs, we used to work with individuals with a low credit score. In our case, our minimum is 575. There is one kind of requirement in reference of collection of past due debt that they cannot exceed the $3,000 in reference of the total amount that we could see on your credit report. We could help you, the CDFI. Always we try to assist you when you, in the past, probably for many reasons, family reason, commercial reason, you fill out bankruptcy. We help you out in order to rebuild credit. So in order to be sure that you could qualify, the bankruptcy should be discharged at least for 1 year. What about the foreclosure? 2 years for the foreclosure. It's very important not to be late on mortgage recently, because remember, mortgage is your major asset. I mean, your property, your home, your commercial. This is one of the major assets that you are having in your life. I hope that you may have many properties on your credit report, or probably you are the owner of a multifamily, but you have to be really on time with the payment because that property is the collateral. So try to imagine the following. If you are late on something that has a collateral, like the property, your house, your commercial real estate, or your auto loan, and you are late on that things, how you are going to act when you are asking for the CDFI assistance, and we are going to provide cash with no collateral. Most of the time, we do not request collateral. The business has to be registered, that's for sure. We cannot work, at least at Ascendus, with sole proprietors. If you are a 1099, we need at least to work with the SBDC in order to help you out to be more formalized, to have your account different from the personal account. Business account, personal account is very important for us. In our case, for Ascendus, we request at least 6 months in operation. So if we are not seeing those 6 months in operation, probably we are going to refer to Miami Bayside Foundation because they have amazing program for startups. And in our case, we could work with individuals that they have personal ID number, social security, different programs depending if you are American citizen or you are a legal resident of the United States. If you have a working visa, Ascendus still have program for individuals with working visa. And those that they are not still with certain Patriot Act documentation, Ascendus could help you out. So why is important? Because Brian mentioned a lot about the grants. Grants are amazing. We love grants. And you have to apply, you have to complete certain requirements. It's very important that you could take advantage of the grant. But anyway, keep in mind that if you have a grant, you are not going to build credit for your business. So business credit will be key for you and your business to eventually graduate from a CDFI and being bankable. So that's the beauty of the microloan. Maybe you need, I don't know, 50,000, or maybe you need 5,000. Instead using your personal credit card, or instead going online and apply to those shark lenders, it will be good that you make the connection with your local CDFI. So this is important, everything that the SBDC is doing to put you in contact with us. Next slide, please. So I could tell you a little bit more about one program that we have, that is the traditional lending program, where we have a fixed interest rate. Of course, CDFIs, we are not going to charge prepay penalty. Our interest is not accumulative. Let's say that you are building credit and you want to have this 10,000 just to start building credit, and you pay before the time. It's not like the auto loan that you have a car financing in 2-3 years and you have to pay the full amount of years, even the fact that you are paying the car early, paying off the car early. So keep in mind that we have a lot of benefits. Everything that you're doing with the CDFI, the interest that you're paying yearly, the closing costs, those are business tax deductible from your regular declaration for taxes. So it's very important. You are building credit and you have the legal right probably to declare those expenses under your tax return each year. Fixed payment, our interest rate, they are fixed, like we said. We could go from 7.5 if you could qualify for the SBA program, up to 14.99. And the next slide, before ending my brief presentation, is in reference of a very unique product that is a line of credit. The line of credit, typically, you will have a line of credit with your bank. This is some kind of line of credit because we could say that it's an evergreen product. And most of the time when you have a line of credit, remember that the line of credit is going to be having some time and the bank could be reducing the amount. In this case, is for evergreen. So if you need more information, the last slide is my contact information. Let's try to connect. Email me, call me. I'm only just a phone call away. Thank you, Brian.
Yeah, and good news is if you call that number, usually you're going to reach Fabiana. So she's usually answering.
Yes, it's true.
But I just want to thank Fabiana and Ascendus. We work with them for a long time. It's a great organization. And so just happy for her and the other colleagues as well to make the time to be on here. And then I think up next is Barrington. And Barrington, I'm going to stop sharing so that you can share.
Okay.
So if you want to load up your slides.
Sure.
And then thanks to Francie too. I know Francie was in the audience. We brought her up to the stage. So thanks to Francie for logging in. Okay. All right, we can see. You're good to go.
Okay, great. Okay. So yes, good morning again, everyone. My name is Barrington Edie. I'm from the Community Fund of North Miami-Dade. We are a subsidiary of the 10 North Group. And as Brian mentioned, we are a CDFI. And we're a mission-based lender, right? And I'm gonna kind of go through our program today and speak how we can help business owners that are looking to access capital. Okay, what we do is Community Fund of North Miami-Dade provides affordable loans to businesses. We like to focus on minority and women-owned business, and we focus within the Miami-Dade, Broward, and Palm Beach counties. Now, this screen here, what I want to speak to is kind of the role and position of CDFIs in the capital continuum circle. So if you look towards your far left, you have the self-funded, right? So as Brian mentioned, that's when you're starting, right? That's when you're bootstrapped, you're starting the business. It's an ideal, but you're working towards building the business. But at some point, as you get traction, you are going to need some sort of capital to help you with the business, bring on additional staff member, buy equipment, things of that nature, right? And a lot of times where the CDFI comes in is we can now look to help those business owners, entrepreneurs that are not quite bank qualifying ready yet, but we can come in and kind of provide that financing to that critical need in business, right? Because this is the stage where if you're not getting that capital, the business is going to fail, right? So we play that mission critical sense where we come in and we can help these businesses. And our goal ultimately is to get these businesses to a point where they can qualify to the next stage, which would be commercial bank qualifying. And that will be where they're ultimately going to be able to get the best rates and things that and best for their business. So if we go into some of our signature products, right, we have our traditional business loans, right? And those range from anywhere from 50 to 250,000. We can go up to 5 years. And as you can see, there's a various use of the needs. You have equipment, working capital, and things of that nature. We typically like to ask for a minimum of 1 year business for this product. Our next product that we have is microloans, right? So anywhere between 10 to 50,000. And we can do this as an SBA microloan or conventional microloan, right? And we can go up to 5 years. And as you can see, these are what some of the uses are: equipment, working capital, inventory. And we will look at startups as well. Our last product, what we have is commercial real estate. So these are owner-occupied commercial real estate. So for those that are seeking, maybe businesses that they're currently renting, but they're looking to acquire a space, right? This potentially could be a great product for you, right? So we lend anywhere from 250 to 5 million, right? And you can see these are the terms: up to 5 years with a 25-year amortization schedule, minimum of 2 years in operations, and the uses of funds are property acquisition, refinance, and commercial renovations. So technical assistance is really, again, where we think CDFIs shine amongst all the organizations, right? And we all work together, right? So one of the things is when we're talking to a business owner, they may not be quite ready for financing today. And the goal is to really help that entrepreneur with whatever assistance that they may need, so we can get to a yes eventually if we can't help today as far as their financing. So technical assistance, again, is where we come in and we can really provide help and help these business owners in terms of what they're looking to accomplish. All right. Just want to go over this brief. With any lender that you talk to, we just wanted to, this is your credit assessment, right? Your character, right? So your character is what we're going to look at, right? Because we want to see basically what is your character when we're evaluating, are you going to be able to pay us back, right? Have you paid your obligations in the past? And if you did have a hiccup, you know, what was that hiccup? Are you back on track? Things of that nature, right? Capacity, right? What's the capacity and what's your ability to repay that loan, right? Capital, right? With any loan, we like to see in terms of what is the borrower willing to invest in their business, right? You know, us as the lender, we're injecting a lot of capital into the business, but we want to see that the borrower is willing to put some money as well, right? So what's their skin equity in the game? Conditions, right? Conditions are a very important piece when we look at a loan today. What we would have did last year, we may not do this year based on the sector, right? So I just want you to kind of be thinking about that. And this is a very important question to ask your CDFI or lender in terms of what industries do they focus in? Maybe what industries do they not focus in, right? And then collateral, right? Last, it would be assets to secure the loan. And that could be anywhere from real estate, that could be just business assets, equipment, things of that nature. Docs, you'll need your tax returns, bank statements, personal financial statements, credit reports, things of that nature. But that's something that we can go over with you directly in terms of what the specific needs are. But I just want you to have an idea in terms of what some of the documentation would look like. And last but not least, here is my contact information. Again, would love to connect with those that are seeking capital, and schedule a strategy session where we can see how we can help with those needs, right? My phone number, as you can see, is right on the screen, and my email is there directly as well. Again, my name is Barrington Eady from the Community Fund of North Miami-Dade. Thank you, Brian, for the opportunity.
Yeah. And I love that your last slide showing a client. That's one of our SBDC clients. That shows how the ecosystem works together. So I love that. And so I'm going to share. So Francie's our closer. So Francie's going to close the panel in terms of CDFIs. So let me just pull up your slides for you. So no pressure, Francie. You got the tough part. Let me switch it. Okay, cool.
Good morning. Can you hear me?
Yeah, we can hear you.
Great. Well, thank you. Thank you so much. Good morning, everyone. Thank you, Brian, for inviting us today. And my name is Francie. I represent Miami Bayside Foundation. And my purpose today is to share with all you our mission and our passion assisting small businesses. As our previous panelist, we are a CDFI, and our purpose is to support small businesses in South Florida. We do that through 3 programs: loans, technical assistance, and grants and scholarships. Today, I'm going to mention about the loan program and the technical assistance. Regarding the small business loan program, we are focused on small businesses located in Miami-Dade, Broward, or Monroe. Something that is very special about Miami Bayside Foundation is that we assist small businesses, even startups. That's important characteristic about our program. We work with companies that have a good business strategy, but not necessarily they are open to the customers, not yet, but they want to start a business. So once again, if you have a good strategy and your business is registered in Miami-Dade, Broward, or Monroe, you are welcome. The same for businesses that are in operation and that are seeking to elevate their businesses. About our criteria, we are focused on small businesses owned by minorities. It means women, people of color, Hispanic, Asians, and Native Americans. An additional characteristic or requirement is that our entrepreneurs must be a green card holders or US citizens, companies for profit, and very important, job creation, because as a CDFI, our purpose is to support the economic development in the region that we are covering, and the way that we measure that is through job creation, but not necessarily jobs that you are going to create immediately or after the disbursement. You have a window of time to create jobs in 2 years. So if you are considering to hire a W-2 employee, 1099, or even a person in full-time or part-time, that is considered as a job creation. Next, please. So the terms of our loan, the interest rate, 6% per year. The term is up to 5 years, and the amount is up to $250,000. The purpose of the loan are for working capital if you are seeking money to acquire equipment, update your vehicle related to the business, please, and maybe to improve the company's marketing campaign, hiring personnel. We have the resources that you are seeking. Next, please. So how to apply? You can visit our website, miamibaysidefoundation.org. You can start an electronic application. we are going to require information about you, about your company and your project, and 24 hours after the application or that you have submitted the application, we are going to be in contact with you. The idea is to assist you through the whole process, to resolve your questions if maybe you have any concerns about the requirements or how to fill out the documentation, the forms. We are here to assist you through the whole process. The next one, please. So once again, we are going to require information about you, your company, and your project. We are going to require to fill out a loan application. We are going to ask for your taxes, the financial statements, and very important, projections and business plan. Why? Because we want to understand the impact that the loan is going to have in your business, and especially for startups. So we want to understand the business strategy and based on it make a decision. And about the technical assistance, we provide trainings for free, most of them virtual, and we cover topics as sales, financials, artificial intelligence, taxes, all those topics that are important to sharpen your management abilities, skills, once again, for free and virtual. The classes are available in English and Spanish, and now we are introducing a new technical assistance, even in Creole. So once again, you are invited to visit our website, and you can apply through our websites to all of the events that we have this year. And finally, our contact information. If you are interested in the loan program, please feel free to contact me. And regarding the education program, Alan Alvarez, this is our contact information, and we are happy to assist you. And once again, Brian, thank you so much for inviting us.
No, thank you. Thank you. It was a great presentation. Let me check the chat. I know that the chat was disabled, so I think folks were putting in the whatchamacallit, in the Q&A. Let me double check before I let you guys off the hook. Let's see. I don't see anything. Genesis, I don't see anything in the
Yeah, there is not a question.
okay.
Oh, goodness.
And if you guys think of some questions afterwards for Francie, for Barrington, or Fabiana, you can email us, because we will be sending you guys a copy of the presentation afterwards. So feel free to do it. And for Francie, Barrington, and Fabiana, if you guys want to stick around, you can turn off your camera. Or if you want to stick around in case there's any questions later on, I'm happy to, but I know you guys are super busy, so don't feel like you have to stay on the whole time. And then kind of following up on that, that's a tough presentation to follow where you're actually meeting a lender. But in terms of businesses, kind of like the first step that you're going to do is bootstrapping, where you're basically self-funding the startup business via yourself or family and friends. You could use that by your savings account, your 401k, other financing. You retain control of the business, but you are taking more risk. So you definitely want to talk to your financial advisor, so that you don't jeopardize any retirement plans. Right now, especially with everything going on with the economy and stuff, sometimes it is the best time to start a business, but you definitely want to take a calculated risk. And with bootstrapping is you could also reach out to family, friends, and business acquaintances, but you need to make sure you don't mix your personal and your business relationships. You want to clarify any risk to potential investors. You can settle on a fundraising strategy and document all the transactions. Don't make it like where you're basically being kind of loose with that, because actually we've had a number of clients of ours that were able to reach out to family, friends, or business acquaintances. And actually, when they're looking for more funding, they go back to them because they've been transparent. They did document everything. And basically, they were giving them regular reports. So they were more easily able to get funding from those existing investors than they were able to go out and get new people. So definitely you want to communicate regularly with all those folks and then work up to more professional investors. I know that we did talk about grants. a lot. So you can research all those different grants that are available. You want to identify those that you have the best chance of securing based on a lot of the criteria. And you see from the mission-based lenders, they all have particular criteria they're looking for, different stages of the business and other characteristics. I would encourage you to start local with the grants. There are local organizations here in Miami-Dade or in Monroe that are focused on growing folks either starting a business or an existing business. So let's look at the type of groups that you would look at. Like we said, first look up like your county or your city's economic development department. Look up for these organizations if they have grants or they have incentives to local businesses. That could be a business looking to move into their area, or that could be a business that's already existing. Also, depending on where you live, you might have a business improvement district, a community redevelopment agency, a downtown development authority, or a Main Street program. All of those offer different types of programs, whether it's like improving facade, like the front of your building, your signage, um, whether you're looking to put outdoor seating, capital improvement grants, or other grants that are available for recruiting and retaining businesses. For SBDC, we work a lot with those community redevelopment agencies and business improvement districts because they really want to help keep the businesses in their particular areas and also recruit new businesses to come in. There are also community foundations that either cover like a state or a region or just a particular community. They usually target nonprofits, but there are sometimes opportunities for small business financing because they're basically like a conduit between like a big philanthropic organization and either nonprofits or community businesses. The big example in Miami is the Miami Foundation. Miami Foundation does get a lot of funding. They have done small business programs in the past, both grants and loans. There's currently not funding available from Miami Foundation, but you can look up different organizations. What we did is we did look at this tool that lets you search for community foundations. Also in the back of the presentation, I did include information on some particular community foundations in our area. In terms of national organizations that give small business grants, some of the ones that are pretty regular is like FedEx, National Association for Self-Employed, NACE. There are, like with everything, there's requirements and how you can use the funds. And then, like I said, don't sleep on those programs that are cohort based, but you can complete the program and be eligible for financing. So those are also programs that are available. I did include some information in the back on like different links that you can look up. Regarding small business administration loans, if we're looking at that continuum, you would start with a mission-based lender and then you would work your way up to an SBA loan. These are loans that are basically not given directly from the SBA, but they do go through commercial lenders and other community organizations. The SBA funding reduces the risk for the lenders, lowers the down payments, helps lower the rates, and provides continual support for that. And I did include the link up there for SBA's lender match, where you can basically put in where you're located, what type of funding you're looking for, and they will, like as the title says, match you with a lender. And I did include that link in the back as well. The SBA, Fabiana kind of mentioned it, but the SBA also does have a microloan program. Microloans are up to $50,000, and they help nonprofit childcare centers and also small businesses to start up and grow. You can use it for working capital, inventory, furniture or fixtures. You just can't pay existing debts or purchase real estate. And you can look up your micro lenders. And when you look it up, Ascendus is one of the micro lenders. So you can look up that program. I also did include the link in the back as well. So we're giving you some really good information. The SBA's biggest program in terms of loans is the 7A program. 7A is named for the section of the Small Business Act. They did try to come up with like a sexy term for it, but I guess all the lenders and the businesses were not following it, so they just went back to S7A. But the 7A is basically like a working capital program that provides loan guarantees to lenders. You can use it for a lot of different purposes. It's kind of like the Swiss Army knife, where you can basically buy real estate and buildings, short and long-term working capital, refinancing existing debt, purchasing equipment, You can also use it for different things like all the different bullets that are listed. The maximum SBA 7A is about $5 billion. They're going to look at where your business income is derived, as with everything, what's the credit history, and where your business operates. You have to be located in the US, you have to operate for profit, you have to be under the SBA size requirements. You can't be ineligible, so that's like adult entertainment, marijuana, can't be like house flipping and things like that. You also have to show that you can't get reasonable credit on from like a bank or a commercial source. And you have to be credit worthy to be able to show that you're going to repay the loan. So if you are looking for a 7A lender, you can look up at the link that's provided here. That would also be under Lender Match, where you can find it. The SBA also has a program called the 504 loan program. That's basically long-term fixed rate financing for fixed assets. That could be real estate, that could be equipment. 504 is a little bit different because it goes through a certified development company, CDC. Those are basically just a community-based organization. CDCs are regulated and certified by the SBA. The maximum loan amount for that is 5.5 million. I did include a link in the back. You're also going to look for lender match for that. But there's a number of CDCs in Florida. To be eligible for a 504, you have to operate for profit. You have to have tangible net worth less than $15 million. You have to, they also look at your net income after taxes. Other things include that you fall within those SBA size standards, that you have management expertise, a good business plan, good character, you know, the 3 C's, and also being able to repay. And then, like I mentioned, basically 504 loans can be used for existing buildings or land, new facilities, and also machinery and equipment. So it is a really good program, and the CDCs that work with the program, they work very closely with banks because a lot of times you'll be getting a 7A loan, but then you might be eligible for a 504. So they will work hand in hand with banks that don't make 504 loans because the 504s go through those CDCs. And then we talked about the uses of funds. And then I did also put up there like the link that you can search for certified development companies. There's a handful in every state. So you can look it up and just search for Florida. We talked a little bit about pre-seed funding. This is basically equity financing that can include a stage where you're reaching out to family, friends, and business acquaintances. The funding range for this kind of pre-seed funding is anywhere between 5,000 to 100,000. There's no restrictions or limits, but you definitely want to outline the risk to potential investors, settle on your fundraising strategy, and you want to document all the transactions. It would make for a very awkward Thanksgiving if you borrowed some money from your uncle and you weren't properly documenting it, you weren't keeping them posted. So you might end up, you know, causing issues. And like I said, some of our clients have really worked the friends and family round where they've been able to continually go back to friends and family and business acquaintances and get funding to grow their business. So you definitely don't want to turn off those initial investors. Our team does recommend that you have a shareholder or membership agreement that spells out the relationship. Just because in business, just like in life, things can go south, things can go sour. So you do want to just properly document everything so you don't have any issues. We talked about SBA loans. Traditional commercial loans are not guaranteed by the SBA, so there is an increased risk for lenders. The rates are going to be higher. They might have a shorter repayment plan because it's not backed up by the federal government. But the upside for commercial lenders is they do have a variety of financing options. You only have to meet the lender requirements. You don't have to meet the SBA's as well. You also don't have to fill out all the SBA paperwork. They streamlined SBA paperwork in recent years, but you still do have forms and things that you have to meet with the SBA. So you're basically just going to the bank and going through their particular requirements. You do want to go to somebody where you already have a personal or a business banking relationship. It could be a company, bank that you have like your mortgage, or that you have a savings account, or you have, you know, a checking account. So basically start with them first. Angel investors are accredited investors who seek high returns with the risk level through private investments in early stage pre-seed companies. They typically do this in clubs or associations. So they want to look for folks that have like growth potential, strong management teams, and solid business plans so that they can kind of like identify through the particular like all the different ones that they get. Um, that they could basically kind of have your business stand out because they're looking at, 25, 50 business plans or pitch decks a week. So basically you want to basically stand out with what they're looking through. They are going to be focused on businesses that are in industries or technologies that they personally know so that they have a good litmus test or a good feel for kind of what's coming across their desk. So you might be in an industry that they're not really investing in because they don't know that industry. So be mindful of that. Angel investors are looking early stage, sometimes without generating revenue or customers. The business needs to have like a solid business plan, that MVP, a minimum viable product, or have like a strong management team with industry experience. So they're kind of looking at potential. Um, and the business basically provides the angel investors with shares or the right to buy at a later time in exchange for the investment. So very few businesses do get angel investors. Shark Tank is really cool and it's good to see behind the scenes, but you definitely need to do your homework and manage your expectations if you're going to go this route. They could provide strategic financing for your business as you're growing. They could also bring that management experience into your team, but they do want high returns on investment because they're going to be investing in a lot of companies and not all of them hit. So also a lot of businesses need to be aware that you are going to lose some control over your business. So maybe you don't want to give up control in exchange for funding. So that's where you would go the more traditional route of financing, but they are going to maintain ownership in the business. Similar to angel investing, venture capital are those private equity firms that look for early stage and emerging companies. They're going to look for high growth or high growth potential. That could be like number of employees, annual revenue, and innovative products and services. These businesses that are seeking equity financing can't be funded from more traditional sources such as banks. So we talked about like cannabis or CBD. Those are getting like friends and family are getting different venture capital funds because they're not eligible to be getting a bank loan. If you do get equity financing, it might prevent you from obtaining a loan that has any type of personal guarantees or ownership. So you do want to be careful if you're going to like jump back to like SBA loans or if you're looking at like a commercial loan. So you want to be careful of going the venture capital route in that respect because you will need to disclose like ownership. For venture capital, basically the investors are going to get shares in the company. They're going to play an active role. Don't always think that they're going to be like a silent investor because if a venture capital firm, an investor has funding in your company, they might want to say in how you're running it, what you're doing, key decisions. So you do need to keep that in mind. So you're not going to need to repay it or put up collateral, but you will, need to deal with the investor in your company. They're going to own a stake in your business. Like we said, they may make controlling decisions based on the amount of funds that's invested. Companies that seek venture capital funds, they're looking to commercialize a product, scale up, or they want to get in a seasoned entrepreneur as part of their team and their company. But they do want that high rate of return because the ones that hit need to make up for the ones that don't. I do want to mention there are SBIC, Small Business Investment Companies. These are under the SBA. The SBA basically has guaranteed funds to these particular groups. They could range anywhere from 250,000 to 10 million, and the interest rate is about between 9 to 16%. They also invest in businesses in exchange for the company. So that what I talked about was loans. The investments under SBICs can range from 100,000 to 5 million. A lot of the success stories, and I think I mentioned the next slide, from the SBA were actually SBIC funded. Apple, Outback Steakhouse, FedEx, America Online, Costco. But they do focus on particular industries as with the other ones. They focus on geography And basically they are looking for more mature, profitable businesses. So it's not going to be like a pre-venture or a startup in most cases. To qualify for SBIC, you do need to have 51% ownership of the business, qualify as a small business, and be in an approved industry that they're looking to invest in. We didn't have an SBIC based in South Florida or Miami. Recently, there is one, but what I'm seeing on the SBA website is it's based in Washington, D.C. So you could look up for that one, and I did include in the appendix some links to some of those programs. And then I do want to walk you through, because I know we have a couple minutes left, just the appendix. We are going to send this to you guys after the presentation, but we are providing you with some direct links. So we talked about grants. This is a list of local grants that's available. I would also encourage you to check out Access Helps. They do list grants and different opportunities and trainings. There's a couple of different ones that are available, like the Miami-Dade County Mom and Pop grants, the CRAs that we talked about, different business improvement districts. I did include some community foundations, both in Miami-Dade and also in the Keys. We talked about national grants. This is where you can look up national grants that are available. Mission-based lenders, shout out to our panel of mission-based lenders. We did include a list here, so you can search on the locator at the top, but then also I did put the link to the individual organizations, so you can follow up with them. And then they did put that they do have their contact info in their slides and the information, so we'll send it. If you're searching for SBA lenders, the lender match and the search for 504 lenders is listed here. I didn't get into too much about crowdfunding and peer-to-peer, but I did include some information on that as well. If you're looking for angel investors or venture capital, we listed local organizations here. Refresh Miami also is a great organization that has a lot of updates on the tech sector, investors, and so they have a resources page, but also Refresh Miami is just a good website to check out in general. I did include the SBA SBIC directory, and Lafayette Square is the one that lists South Florida as one of their areas, but would note that they are based in Washington, D.C. And then if you would like to meet with an SBDC consultant, you can scan the QR code, but you'll also get our contact information as well. And then before we wrap up, I will check the chat just to make sure I'm not missing anything. Thanks to Genesis for putting up the survey. And I saw the Q&A. We don't have any open questions. I see that
I'm
Fabiana.
sorry. Yeah.
Yeah, I saw Fabiana was on it, so you were.
Yeah, you know what? There is some kind of glitch with the system, so we have to apologize because I'm receiving some kind of question from the panelists. We appreciate that they are very active, asking some question and introducing their businesses. But please, there is SBDC there and all the information. Connect with them and they will guide you. Absolutely.
Yeah, thanks for that though. Thanks for handling the questions in there. And guys, sorry about that. We all know technologies works most of the time, but you do have glitches every once in a while. So before we wrap up, if you have any follow-up questions, please email our team. You're going to get a follow-up with the presentation and also the link to the recording. And I also want to say shout out, thank you to our great panelists, Fabiana, Barrington, and Francie. These are great organizations in the community. We all work very collaboratively, like they mentioned. So I would encourage you to check out their training programs, their loan programs, their technical assistance. And with that, I think we're going to wrap up. So we'll be a minute early. So we'll wrap up. And just thank you guys for attending and have a great rest of your week. Take care.